watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading week. Let's go straight to our banner story. BSP Governor Ben Diokno now expects the local economy to return to its pre-pandemic levels by the third quarter of 2022. Diokno says growth prospects appear bright after the GDP expanded by 7.1% in the July to September period of this year. He also attributes his latest forecast to the declining number in COVID-19 cases and the ramped-up vaccine rollout. Now, in September, Diokno said the economy could only revert to pre-COVID levels by the last quarter of next year or early 2023. Diokno says that with the latest developments, the growth targets of 7 to 9% for 2022 and 6 to 7% for 2023 look doable. Now, the Bangko Sentral ng Pilipinas is widely expected to keep rates steady on Thursday to continue supporting the Philippine economy's recovery. 20 economists polled by Businessworld last week unanimously forecast that the Monetary Board would maintain the overnight reverse repurchase rate at an historic low of 2% during its November 18 meeting. Despite the stronger than expected GDP growth data in the third quarter, analysts think there is still a need to keep an accommodative policy stance because recovery has yet to firm up. Still, economic managers are optimistic that the 4 to 5% growth target for 2021 is attainable as growth expanded by 4.9% in the first 9 months. And while inflation is still above target, it has eased for 2 straight months. Analysts said this strengthens the case for the BSP to maintain current policy settings. Bangko Sentral ng Pilipinas Governor Ben Diokno had also said premature hiking at the interest rates could pose more harm to the economic recovery than increasing it too late. Happy Monday. Will we see the same exciting action in the local bourse as we did last week? There's a lot of things still. Earnings, BSP meeting this Thursday to drive this week's trading. You can see on my terminal here a little bit of a pullback down by 0.2% to just above 73.60 here. Of course, last week we had quite a run amid the higher than expected third quarter GDP and also easing to alert level 2, which will now extend until November 30. This, according to Regina Caps, Luis Lambingan, investors will be waiting for a few more earnings. With inflation and GDP already released, what will the attention be on? It will be on the next BSP meeting. Another chief economist here, you've got RCBC's Mike Ricafort saying that, of course, today is the deadline of the same party substitution for candidates in the upcoming national elections. That could be a major catalyst for this week's trading. And why would that matter to markets? This, according to 2TradeAsia.com, political climate heating up dramatically over the next few weeks. The speculations, at least over the regulatory and business risks of the next 6 years, will be in focus. Now, speaking of risks, let's just take a look at one specific sector here, and that is the property space that is down by 0.6%. Despite the fact that the Bangko Sentral is anticipating the real estate market to recover amid the expected rebound in the overall economic growth next year. Of course, it slumped last year due to the pandemic. Diokno, of course, Governor Diokno said that the real estate and construction subsectors have started to recover in the second quarter of this year, at least based on the latest residential real estate price index. And why is this important and linked, of course, to the policy decision on Thursday? He did mention that the asset prices affect volatility in general price levels and economic output. And of course, it might give rise to widespread financial instability. And he did mention quite clearly that the central bank's actions affect the behavior in the property market. Whenever they hike the policy rate, that lowers the value of asset holdings and makes credit more expensive for property players. And finally, just one quick peek on a sector to watch here, and those are the airlines. This has a U.S. court has decided, or will be deciding at least, on whether they will be approving the reorganization plan of Philippine Airlines that will be next month. That is a court in New York. And they mentioned that if the confirmation of the plan hearing goes well, this will pave the way for the emergence from Chapter 11. We also have some sources here that might happen. So PAL might reemerge from bankruptcy by the end of the year. And also, you've got Cebu Pacific hiring a new cabin crew, anticipating a recovery in air travel demand. They have reached out to the former employees as the airline gets ready for growth. Now, here to weigh in, we have with us Matt Cabangon, president of AAA Equities. Good morning, Matt, and welcome back.
Hi, Danny. Thank you for having me.
Okay, Matt, we're seeing quite a pullback after a very exciting week or even last couple of weeks here. Has all these, the optimistic news, so to speak, the better than expected third quarter GDP, the alert level 2 announcements already been priced in? Are we seeing a very strong resistance level?
Well, Danny, right now the market is at a very strong resistance level between 7,300 and 7,400. However, this feels an awful lot like last year, right? There's a lot of deja vu going on in the market where we're rallying into year end. Economic data looks good, earnings look good, uh, and COVID cases are on the way down, right? So it feels a lot like Q4 2020. Uh, with that in mind, I'm a little cautious heading into Q1 of next year, right? Um, because while we already do have vaccines rolling out, we have a new sort of demon to watch out for, and that's inflation.
Mm.
So this is it feels an awful lot like last year, but with slightly different risks now. So while I am optimistic heading into year end, I just don't think this is a uh, straight line upwards going into next year.
Okay, Matt, what about the third quarter earnings? Third quarter saw, ECQ in NCR, and nevertheless, we still had this rally after all of these earnings are still coming out. Has it been better than expected? Does it in any way illustrate the recovery is faster than what you were expecting?
Well, earnings so far have been quite nuanced. So let's take banks for example. Uh, the bright side in bank earnings across the board has been that they haven't been losing as much money as we thought on non-performing loans. So that's a good sign. But their revenues aren't particularly stellar, and their margins haven't been expanding. So it's a mixed picture, right? The headline number looks good, but if we look a bit deeper, business is not yet back to normal. So until we start seeing sort of the things under the hood improving, I'm hesitant to say that we're back to business as usual, which we're clearly not.
But can you say, at least for the banks, that the worst is over? Because they've stopped basically putting aside provisions, saying that that the recovery is imminent, the loan growth is imminent, and the third quarter is behind them.
Well, I do firmly believe that the worst is over for banks. I am overall bullish on banks for next year, particularly because as the economy opens up, you know, th- that demand for credit, there's going to be revenge borrowing coming next year, right? The people are going to need capital to sort of roll out their businesses again and to expand. Uh, because let's keep in mind, right, the last year or so has been a year of survival, not necessarily of expansion. So if we believe that next year is when the economy starts kicking into gear again as far as normalcy is concerned, then banks should do very well.
What about the property space? We are, of course, waiting for the BSP decision, or basically the decision is expected to be the same, wherein they will hold rates. And you did mention the boogeyman, which is inflation. How does this all feed into to property prices and the fact that you mentioned there might be revenge borrowing when it comes to this sector?
Well, things are looking quite good for the property sector. So like you mentioned, right, the BSP uh, should be holding rates this week. It would be very shocking if they did anything else other than hold rates. Uh, but it's a very tricky situation, right? The BSP is not going to hold rates at these historic lows forever. Uh, but with that in mind, pogos are reportedly coming back, so
Mm.
that should keep prices relatively elevated. Overall, I'm not too hot on the property sector just because
Okay.
we're sort of sitting on uh, a lot of things that aren't very clear yet. But with that in mind, uh, going into the end of the year with the BSP staying on hold should keep their stocks quite firm.
Okay. What about inflation, Matt, and the fact that you did mention it would be surprising if the BSP did hike right now, but it's not just inflation here in the Philippines. You've got it globally as well, and the Fed already tapering there. What would that mean for markets?
Yeah, I think this is, the biggest concern across every single market, right? The US just printed something like 6% inflation, a number that hasn't been seen since the 1980s or 1990s. So it really is a very strange time for markets. As far as the Philippines is concerned, we have to be very concerned because this is not a isolated issue, right? We've seen other emerging markets start raising rates already, right? Let's take a big country like Brazil; they're already raising rates. Um, the U.S., while the Fed hasn't explicitly said that they'll be tapering, the markets have pulled forward their expectations of a Fed rate hike. So historically speaking, right, the BSP tends to follow in the footsteps of the Fed. So if the Fed were to start hiking rates as soon as next year, uh, I think it's a foregone conclusion that the BSP will be following. So this is very much something that all market participants should be looking out for because inflation is very real right now, and I don't think everyone's convinced that this is a transitory issue as some people have
Got
guessed.
it. How would this affect your outlook on the foreign funds coming back into the Philippines? I mean, what trends are we seeing actually? Are they pulling back? Are they coming back to emerging markets? Are they favoring the Philippines over other markets, especially with this interest rate story?
Well, rising rates is very bad for emerging markets, right? that's 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 going to drive funds out of emerging markets back into more safe haven assets like developed market equities, developed market bonds. So that outcome would not be very good for our stocks across the board, and
Mhm.
will definitely not help with foreign flows. However, there is a positive here where recent risks out of China have
Right.
shifted some of those foreign flows away from China into sort of the periphery Asian markets like the Philippines.
Okay.
So there are a few factors at play here, but overall, if we were to see a substantial rise in inflation and a an earlier than expected Fed hike, I do expect foreign outflows from our local exchange.
Okay, let's talk about the present political climate and the impending 2022 elections. Today is of course a very big day. Will this affect markets in any way? I mean, have you seen this happening historically, or is this not necessarily fundamental to the operations and the bottom line that investors are really watching out for?
Yeah, as you mentioned, today's a big day, politically speaking, for the Philippines. But this should not be. This historically has not driven markets, particularly this early on in the election cycle. For one thing, we don't even really know what the economic policies of the presidential aspirants are.
Mhm.
So markets don't typically react to this news this early. Uh, I expect this stuff to really start kicking into gear probably in February of next year, and that's when we start seeing market movements based on whoever's leading in the polls and what their economic policies are. So it might be, to me, it's a bit premature to
Okay.
anticipate market moves today, but it's something that we should all be looking out for anyway.
Are there more geopolitical risks? Are investors, like foreign investors, more wary to invest when it's an election period, or not necessarily?
Uh, I think typically that particularly reflects in uh, our currency market more so than in our stock market, at least historically speaking. But again, I think that the political climate only really moves uh, prices significantly when something sort of out of the ordinary happens, right? Like let's say. a candidate with a very extreme economic policy were to start leading in the polls, then that's when we see, pretty outsized moves in stock prices. Historically speaking, the PSE does very well during election cycles. So if anything, the bias here is higher if we're isolating things to just the presidential election.
Okay, so in the short term, a strong resistance level there, but perhaps with some positive move to run amid all of this election hullabaloo. Thank you so much for those insights. That was, of course, Matt Cabangon from AAA Equities.
Thank you, Danny.
Checking in on the biggest headlines we're watching out for. The BIR is monitoring social media platform Lyka and other taxable online transaction platforms. Finance Secretary Sonny Dominguez said the agency is working with the SEC and BSP to check whether these platforms are authorized and registered with the Commission. Dominguez said that regulators are now focusing on the digital space because of, quote, there's a very big danger of fraud and violations of laws since this is so new. Recall that last month, like I said, it would apply for an operator of payment system license after the BSP said its marketing arm, Digital Spring, cannot be given the license on its behalf. And it's the last day of voluntary withdrawals and substitutions of aspirants for the 2022 national elections. As of Saturday, 13 individuals who filed COCs for national posts have withdrawn their certificates, while 4 aspirants have already filed substitutions. PDP Laban's Bato de la Rosa and Bongo have both withdrawn their candidacies, but Go also filed his substitution as a presidential hopeful. Davao City Mayor Sara Duterte has also substituted as the vice presidential bet of Lakas CMD, replacing Lyle Uy. Now, for today, former PNP chief Guillermo Eleazar is expected to file his substitution for one of Partido Democratico's senatorial aspirants. Most importantly, we are waiting to see if President Duterte will return to the COMELEC headquarters to possibly substitute as the vice president of PDDS, making him the running mate of Bongo and a political rival of his own daughter. And that's a first look into the business day. Today is Monday, November 15, 2021. Catch Businessworld Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on. Wash hands. Stay safe, Philippines. We are One News.